following particulars, prepare the income statement of Mr. Barani. The items given are revenue from operations, other incomes, expenses, and income tax. So here income tax is a new item which we have not seen in the previous sum. So let's go into the sum. So I start the sum with writing the heading of the comparative income statement of Mr. Barney for the year ended 31/3/2017 to 31/3/2018. Simple, I've written down the format of the income statement with the headings of that particular comparative income statement. So the next step is we have to just put in the figures of 2016-17 and 17-18 first. So now I've entered the figures of revenue from operation, other incomes and expenses as given in the sum. Now income tax is 30%, which we have to calculate from profit before tax. So in order to do that, first calculate the other items. So 30,000 plus 4,000, my total revenue will be 34,000. If I subtract 10,000 of expenses from total revenue, I will get an amount of 24,000. So from this 24,000, I must calculate 30% income tax. So how it is done, I will show it to you over here. So 24,000 into 30 divided by 100. So cancel the zeros and multiply it with 3. You will get an answer of 7,200. Now when you subtract the 24,000 from 7,200, the answer is 16,800. So this is profit after tax. So in the previous sums, we have stopped till profit before tax. So when they give you income tax, you are going to take the percentage on profit before tax and subtract it again to get the profit after tax. So the same is going to be applied over here. So 45,000 plus 6,000 is 51,000. 51,000 minus 15,000 is 36,000. So from 36,000 I am supposed to calculate 30%. So when I calculate 30%, I will get 10,800. So when I subtract 36,000 with 10,800, my answer is 25,200. Right? I think it will be clear for you. First I wrote down the format and then I gave the figures. Then I added and subtracted appropriately. The last step, income tax, I must calculate it from profit before tax. So whatever answer as profit before tax I get, I will multiply it with 30% and get the answer for income tax, and then I have to subtract it. So I will subtract profit before tax and income tax to get the answer as profit after tax. Now we are going to start the comparative statement. So we have to compare both the years, that is the base year and the next year, first year and the second year, and write the increase or decrease in the amount. After writing the increase or decrease in the amount, we have to find out percentage. So the increase and decrease in the amount. So here in the base year, that is the first year, it is 30,000 and 45,000 here. So the increase in the amount is plus 15,000 rupees has been increased from the first year to the second year. Next 4,000 and 6,000. So there's an increase of 2,000 rupees in other incomes. 34,000 to 51,000. So there's an increase of 17,000 rupees for the total revenue. 10,000 and 15,000. So there's an increase of 5,000 rupees. 24,000 and 36,000. The increase of 12,000 rupees. Next 7,200. It has become 10,800 in the next year. So there's an increase of 3,600 rupees. Lastly, 16,800 and 25,200, there's an increase of 8,400 rupees. Now we are going to calculate the percentage, whether it has increased or decreased. Obviously, we have all put plus over here, so everything is going to be increased only. So plus. So I'll show you the working for the first one. 15,000, the absolute amount, divided by the base year. Base year is 30,000. Into 100. So I will get 50%. Likewise, we are going to do for everything. So 2,000 divided by 4,000 into 100. Again, it is 50%. 17,000 divided by 34,000 into 100 is 50%. 5,000 divided by 10,000 to 100 is 50%. 12,000 divided by 24,000 is 50% again. 3,600 divided by 7,200 is 50% again. And lastly, 8,400 divided by 16,800 also is 50%. So all my percentage of increase is at 50,000. One thing what you have to remember is this year is your base year. That is your denominator. So using this year only you are going to compare and get your percentage.